Welcome, and we're glad to see you here at Mortgage Mastery regarding what information is needed for a pre-qualification. I'm Kara Lowry with Acadiana Mortgage, and again, this show is about what information is needed in order to get pre-qualified. Because a good loan officer asks the right questions up front. So it's just like a computer, garbage in, garbage out. If you provide the wrong information or too big of estimates, then the information that you give to your loan officer is going to cause them to give you wrong information back. So you want to try to be as exact as possible. So what I'm going to do is pose you the questions that I normally would do if I were talking to you over the phone. So, first name, middle name when you were born, last name, and have you ever been married? I will also ask your current marital status. Depending on the type of loan that you're looking at will determine if we need your spouse's information, because Louisiana being a community property state. Are you a junior, senior? If so, of course, we'll obtain that information. We want to make sure that we have the right credit report. We'll ask you your social security number, your date of birth, current address, how long you've lived there. Do you rent, own, live there rent-free? If you rent, how much rent do you pay? I'll ask you an email address, a cell phone number, a work number, and possibly a home number if you have one, but not too many people have home numbers anymore, so very rarely do I ask that question. So the more critical information is in reference to your employment information. So name of your employer, job title, start date, are you hourly or salary? You'll indicate which one. If you're hourly, then I'll ask you, how many hours are you guaranteed a week? The reason that's critical is because if you're guaranteed 20 hours a week, but yet you typically work 35, well, I may not be able to count that 35 depending on how long you've been working there and how long you've been working those 35 hours a week. So it's critical. Hourly rate, how many hours you're guaranteed a week, and then do you also receive any type of bonus or overtime? And all of that in totality also depends on, again, how long you've worked there. Because if you've been there 6 months and you work 50 hours a week, then we may or may not be able to count those extra 10 hours worth of overtime. There are some rare instances when we can, but it's so critical that you provide the information very specific to those questions. If your salary, of course, salary is easy. How long you've been on the job is important because typically we go back 2 years. So everything in our industry is kind of around twos, right? We verified 2 years of employment, 2 years of residency, and then all the documents that we get once you make full application, again, twos. 2 pay stubs, 2 bank statements, 2 years of W-2s, maybe 2 years of tax returns, only if it's applicable for your file. So that kind of encompasses the employment information. So if you've only been on that job, well, let me rephrase, if you've been on that job less than 2 years, then we'll obtain that information for the prior job. Again, going back 2 years. So changing jobs in and of itself doesn't disqualify you. I've had people change jobs from, even during the actual formal application phase. It just depends on what you do, what your profession is, and are you, a lot of different factors involved in that. So if you have any questions about that specifically, please don't hesitate to reach out to me, 549-2800. So we've got 2 years of employment, and then we're also going to find out, do you have an idea of about how much you want your monthly payment to be? Because ultimately, whatever I have you pre-qualified for, if that's not what you're wanting to spend per month, well, then I'm not really helping you, or I'm not doing my job. In my opinion, my job is to get you in the house and the payment that you're wanting to be in. And then, of course, the realtor's job is to find you that house. So I have kind of the first leg of that to let you know where it is that you want to be, that you and your family, the plan that y'all have kind of worked out. So we've talked about your residency for 2 years. We have employment for 2 years. And then so we get an idea of about where you want your payment to be. Are you obligated to pay alimony, child support, or separate maintenance? Now, please don't not provide that information, because it usually 99% of the time ends up rearing its head at the worst time, and it's usually maybe a week before closing that we finally figure it out, but typically it does get figured out, and there's been a lot of money and a lot of energy wasted by that point. You've had a termite certificate, you've got a home inspection, you've expended a lot of money, when ultimately, if the loan officer's job is just a fact-finding mission, then sometimes that's where you get those last-minute issues, because sometimes it's not found out to the very end, just simply because number one, we're not looking for it, right? And then number two, just certain parts of the process, with fraud guard reports and things of that nature, those aren't ran until the very end. So the key is just be truthful about everything, and don't think it's not going to be uncovered just because you didn't tell your loan officer about it. So, but kind of backing up a little bit to the alimony, child support, or separate maintenance. On the income side, the only time we can include that as income is, first of all, if you're choosing and wanting it to be included, right? The second thing is then we have to prove that you've been receiving it. Some loans we only have to prove that you've received it for 6 months. Some we have to prove all the way back to 12 months. All of those also require a copy of a court-ordered document, because ultimately that's the only way that you can force someone to pay you, is if there's some type of court-ordered document or judgment that's entitled you to receive that money. But just because you receive it does not mean that you have to use it in your actual loan application as far as qualifying goes. We can count income like Social Security, we can count disability. Almost all of the income has parameters of meeting certain thresholds of likely to continue, which brings up the self-employed component. So if you're self-employed and you've been self-employed for 6 months, we will not be able to count that income, because it's not deemed to be consistent. It's not deemed to be reliable. So typically 2 years of tax returns are required to show its sustainability, because most businesses fail in the first year, if not the first 2 years. So fundamentally speaking, all loan types on what we call the qualified mortgage route, which is FHA, VA, rural development, conventional, all of those types of loans are what are called qualified mortgages. If you're wanting a non-QM loan or a non-qualified mortgage, that's kind of a bridge in between the old loans of the past that were the true non-conforming, kind of the crazy loans that were done. Basically, if you had a pulse, you could get a loan. If you had a great credit score, you could get into it with no money down, interest only. Most of those loans were very bad, and people made a lot of really bad decisions in doing them because they never planned on showing enough income to qualify. So a lot of people were just set up for failure, and a lot of people made bad decisions to do those types of loans. But I won't get on my soapbox about that. So back to a qualified mortgage. So 2 years of tax returns, and that's going to be business and personal. So that covers the main things. Now, sometimes when I'm running the pre-qualification and I'm asking those questions, sometimes they lead into other things, but I could make a 2-day long video of all of the things that could come up. But again, I cannot reiterate enough that find an experienced loan officer, find an experienced one that's paying attention. Even if you fill out the application online, we still, as loan officers, should be looking at that information and then going over certain things with you over the phone to make sure that the information is precise, because sometimes stuff is just entered wrong inadvertently, or sometimes there's more information that is needed when the online application is filled out. That's why we are not a company that allows you to push a button and be pre-qualified online without a human looking at it, because there is too much data entry error. There are too many other questions that need to be answered, and that's also why a lot of online companies really have a problem with, oh yeah, you're pre-approved and you're pre-qualified, yeah, good to go. And then once you start providing documentation and information, they then realize that the information was not correct. And then they put it back on the buyer who entered in the information. Well, you entered it in wrong. No, we need to ask the right questions. We need to do our due diligence on the front side to make sure that we are asking the right question and protecting people from themselves, because sometimes people just inadvertently enter in the wrong thing, or they don't understand the question, or they don't understand that the way in which they answered it, that there is more involved and more information that should be asked for or to be required. This is why we are supposed to be the experts. So if you have any other questions, please don't hesitate to reach out to me. I'm Kara Lowry with Acadiana Mortgage, your local lender for over 25 years. And please don't hesitate to watch our other videos and let me know if you have any questions whatsoever. And thank you for watching.